You are looking at a daily chart of the Nasdaq, which has finally cratered below its 21 EMA. It was down 126 points today, or 0.7%. Average volume, just a little tick above average daily volume. I've always said that the leading stocks is a better gauge of the health of the markets than just looking at indexes. And I'm gonna get to that in a minute. But I just wanted to show the Nasdaq now that it's below its 21 EMA. You know, we had a strong rally here, and it got I think last week was 8.9% above its 50. And I warned that you got to watch these moving averages because it's always going to come back to these. They're like little magnets, and so maybe this thing wants to pull back into the 50. I mean, it's had a nice run since April 19th. Okay, what's today? July 18th. So, you're looking at 3-month rally here with one pullback to the 21. So here we are. Maybe it'll get some traction and trade higher. I expected it to find support at the 21, and it didn't get it, so that's an expectation breaker for me. That tells me you need to be much more cautious. You need to protect your assets. You need to take profits, and if you have a loss, take the loss. You don't want to be taking on big losses. I'm going to get to that in a minute too, but the Nasdaq now is nearly 1% below its 21 and 1.8% below the 10, which is starting to curl down now. So it's telling you that this is heading lower in the short term, in the very short term. And then the 50, it's 2.7% above the 50. So, it could get there in a day. I think we just had a 2.7 move yesterday. And on the week, the Nasdaq is down nearly 3%. So when the index is down 3%, you can expect your growth stocks to be down 6, 8, 10%. That's just the way it works. SPY, I talked about SPY yesterday. It needed to fill that gap immediately. Didn't do it. The gap from Tuesday, that low was 562.10. Yesterday, the high was 560, and today the high was 559. So closed here just a tick above its 21. A little stronger than the Nasdaq, but not looking too good. And the Dow Jones Industrial Average, which may have been making new highs here, made a new high today, then reversed lower and fell 1.29%. If we look at like a 5-minute chart there, you see how it ran up in the morning and sold off all day. So that's the 30 stocks of the Dow. And then the IWM, which, everybody's excited about, the small caps. It's going to be the summer of small caps. And this one just pulled back. You can see it really gapped hard. So you got to figure that it's going to pull back towards these moving averages. They always do. And that's why I point them out every day. But, with the Nasdaq 8.9%, we knew that thing was coming in. It's just how long is this going to last and how far will it pull back? We don't know. We just take it one day at a time. But time to be, much more cautious with this, with your stocks, with the indexes behaving this way. And of course, I have to get to the not so magnificent 7. They're selling off ahead of their earnings. Apple has earnings on August 1. This one's still above its 21. It looks doing better than most. Microsoft pulled back to its 50 today, which was 436.87, then bounced like, $3.50. So not a bad bounce for Microsoft. They're going to report on the 30th. You got to beware of when these companies are reporting. Meta sliced its 50, and then today just had, and I don't know, an inside day. 479 was the high. Yeah, so it wasn't inside. Made it a little bit higher than yesterday's high, and trying to fill that gap there where the low is at 485, so you can get back up to that, fill the gap from yesterday's low or Tuesday's low. Today is Thursday, July 18th. All right, Google's a little stronger than Meta. This one pulled back to its 50, just like Microsoft. Their 50 is 178, so it closed just a tick below it. So it didn't get the bounce like Microsoft. So Google, Amazon had Prime Day, big news. Everybody thought it was going to rip. Nope. Slices its 50 with volume. That's not a good sign. They're going to report on the 25th. Tesla, acting well. Just came down to its 10 here, forming this like a flag type pattern after this big move. Yeah, finding support and kind of flagging a little bit. So not bad for the Tesla heads and NVIDIA. Kind of a strong close today for NVIDIA. Pull back close to its 50 and it looks like it maybe wants to bottom here. I'm not calling a bottom. I'm just saying if you go to like a 10-minute chart here, this is kind of, it makes the low and then it finds support, it, retests it, right? So if they can't push it below there, I'm not going to call a bottom, but I want to see, it sold off yesterday and it made that low around what, 116. Today it came down to 116 again. So let's see if, they push it down there again, if it bounces or maybe, tomorrow we get a bounce, it's up after hours. I don't know if that means anything these days. All right, that's it for the Mag 7. I talked about the leading stocks of, different sectors that have been strong. The data center group is obviously the one that's, really strong. This is Super Micro. It's one of the top performing stocks, one of the top groups. And this one now has sliced its 50, ahead of earnings here, yeah, on August 6th, which is coming up. So that's not good. Dell, a lot of broken charts here. Dell's broken, slices its 50 with volume. You just got to get out of the way. I'm gonna get to that in a minute, but that's my rule. It's proven to me to be a very valuable rule to save me money. Don't fight the tape. If the stock wants to go lower, let it go lower. You can always buy it at lower prices, It's like a sale, when you go to the store and you want to buy that sweater and it's 50% off, you wait for the 75% sale, right? Anyway, Dell's on sale. It's probably going to get cheaper though. I wouldn't even entertain anything that's looking like that. A lot of sellers in there. Now the other group was that energy group that was so strong for so long. VST, Vistra. This thing's fallen on hard times. You see, I talk about this often as a stock that comes back to its 50 needs to bounce, and it doesn't. It just squats and squats and squats. There's no like buyers to provide a thrust, momentum to push it up towards highs. So what does it do? Then sellers come in and sells off, slices its 50. This thing is just a disaster, man. Somebody get a tourniquet and stop the bleeding. This thing's 29% off of its high, only down 16% this week. So you can't fight that. If you have a loss, take the loss. If you have some profits, take profits. Don't hope for more profits. This is not the time for that. CEG, another one that had a big run, right? Ran up, consolidated, ran up again, and now this looks to me like one of those Weinstein stage 4 declines, where you have your stage 1 where it just kind of goes flat, right? Stage 1 flatness, stage 2 rally up, stage 3 kind of go sideways for a while, then stage 4 it's adios muchachos. So I would not entertain Constellation here. Not with it looking like this. No, thank you. So the energy group, the data centers are broken. The energy stocks that were leaders are broken. Novo Nordisk, the drug leaders are broken. You just got to stay away from this. Like I say, once they slice their 50, it's time to go. And yesterday, Novo sliced it. Doesn't matter. They don't need news. It doesn't need to have a reason. It's just selling off. There's your reason. Big volume selling, and it's below the 50, so there's nothing to do here. Don't try to catch a falling knife. Lilly, same thing. Lilly was up it was about 12 weeks in a row, and now it's got this it's 12 down to 12% off its high, down 11% this week. That's a rough week. Got that inverted hammer candle, which you do not want, but it was up 12 weeks in a row. So profit taking was expected there. Lilly's stronger than Novo as it just traded down to its 50 today and actually closed just a tick below it. So, but still, I'm not entertaining these at all. You got to expect some profit taking ahead of their earnings reports after a move like that. All right, the retail names, I mentioned ELF. Once again, you shouldn't even have to, look twice here. You know that it's sliced its moving average. You got to get rid of it. if it rallies back through there, you can buy it, and it might, and it also might come down to its 200. But this one had, what is it, 3 heavy days of selling after it made that high on Friday, 219. Barely closed higher that day, then went lower on Monday, Tuesday, Wednesday down 10%, and today made a low there at 168. It looked like it was diving towards its 200, and then I don't know, probably some short covering into the close. But you can't touch stuff like that. You got to make them prove themselves, and that looks bad. The other retail names, Dutch Bros actually looks decent compared to the others, but this one was down 4% today, and just a tick, 1.2% above its 50. Kava, not so lucky, right? Kava's, this is broken. Goodbye, adios. Sweet Greens, this thing sliced it a couple weeks ago. That one's gone. Domino's did not deliver. They reported earnings today and sliced their 200. See how it sliced the 50 here? It traded below the 50, into earnings, and then earnings, it fell out, 13.5%. So you just can't entertain this stuff below the 50. It just bad things happen. So, if it rallies back through, like I say, you can buy them, but if not, you can see the danger. So you got to wait, let them prove themselves. I'm open-minded either way. That your best ability is flexibility, and you got to be flexible. If it rallies back through, you got to be flexible enough to, buy it. But below the 50, you cannot own these things. You can see the damage that they're doing to your portfolio. CAMT, this is one of the stocks that was doing really well, and this one traded below its 50 today and closed right at it. But you could see, in the last few sessions, it's down 13.5% this week. Who wants to be down 13% in a week, 4 days? I don't. So that one broke its pattern of finding support at the 21, and now it's at the 50, and very likely to trade below it. Vertiv, they're going to report pretty soon too, the 24th next week. Once again, below the 50, that acts as resistance, and you just can't touch it. Now, if they report earnings and rally back through, you can buy them back. But why take the risk? This is all about risk management. Vertiv is, no go. It's an avoid. AMD, once again, slicing the 50. NVIDIA is holding up decently, but AMD is not. Broadcom in this space holding up okay. Taiwan reported earnings today. Bounced off the 50, came down to it, bounced off it decently. They had a real strong report, but in this market, you can see the growth numbers here really, accelerating sales growth, accelerating earnings growth, but the market doesn't care about the fundamentals. When they sell off, like I say, they don't need any rhyme or reason. They just sell off. The shoe group, that was really strong group. It was top 5 just a few weeks ago, and now it's going the wrong way. CROX made that high of 165 a couple weeks ago, and now it's at 131. So diving below the 50. And so the groups that were leaders is 20% off its high from just a couple weeks ago. The groups that were leaders are now, lagging. So there could be a changing of the guard where we find new leadership. Like I mentioned, the small caps, you just got to be open-minded and flexible. Don't jump the gun. Don't try to be a hero. Don't be a martyr. Allow these things to prove themselves. And these stocks can set up in bases as well. This is Decker's. Slice its 50. This could easily set up in a nice base, trade back above 1,000. But you just got to give it time. Right now, it doesn't look good below the 50. So, this group just really fell out. Anyway, that's it for the negative stuff. I could do this all day long because there's a lot of damage here. I think you get my point. The leaders are, breaking down. So it's time to be cautious. All right, I have to look at some of the stocks that are doing well. DR Horton reported earnings this morning. They were good. They weren't that good, but this is a move you don't want to ignore here because it's breaking out of a double bottom base, 10% higher with volume, and that's what you want to see. That's a clean breakout from DR Horton. So this goes back a ways. So yeah, you gotta like that move. Yeah, 2% growth, nothing to get excited about, but the move is, coming with volume, and that's what you know, you got to hang your hat on. That's what you got to pay attention to. You know, the buyers are coming in on these KB homes. I don't know what's wrong with my keyboard. KB Homes had a nice run, pulled back the last couple of days, but still looks fine. Toll Brothers, you know, this stock looks really good. Got back up to that 135 area and then pulled back. So maybe set up for a move next week. Toll Brothers looks fantastic. Lennar, another home builder. Yeah, this one looked like it was going to trade higher today. They pulled back to that old buy point of 171. GRBK made a new high today. Very nice. Meritage. Yeah, these look good. Yeah, we're trying to break out here. So you get my point. The MHO, the home builders are strong today. The home builders had a making a nice move. And obviously there's rates, you know, the interest rates coming in allegedly have something to do with it. That's Pulte Homes. See, they're all set up near these buy points, though, which is intriguing. But you know, you got earnings coming up, so maybe they'll do something like DR Horton and maybe not. But the 23rd, what is that, next Tuesday? So I guess you could, you know, do an options play or something if you want to just gamble on a move, but you know, that's a coin flip at best. All right. Some of the insurance companies, I have Progressive on my ready list. Looked like it was going to make a move today. It was pretty strong, and then just, you know, the market weakness. Yeah, it looked like it was going to run up, and then halfway through the session, it just sold off. So um, yeah, but you can see the consolidation here in the breakout. So I wouldn't give up on PGR. I just keep watching it because it does look pretty good. Jackson's another one that I have on my ready list. Pull back today. Looked like it was going to run up, much like Progressive. And this one, you know, ran up in the morning and then sold off the rest of the day. Just, you know, a lot of weakness in the tape. You can't fight the tape, folks, and that's why I say it's you got to be cautious here. Cincinnati Financial, another one, you know, made that move yesterday, pulled back, you know, less than 1% today, so kind of like the index. And then Allstate, you're in good hands. This one, you know, came up to that old buy point. I would expect it to, you know, flag a little bit here or form a handle, and not just break right through, but you never know. But that 177.37 is definitely an area of interest in Allstate. Anyway, let's move on to some of the other names that I have on my ready list this week. Gosh, what's wrong with my K? 29.43, you know, paint by numbers here, and it's looking pretty good. It's trading tight within a base. And I know you could say, well, gosh, it did that last time and didn't break out. It just made another base. So it's got the base on base pattern, but it did break out of this base and showed the ability to rip, you know, from what is this, 17 to 29. That's a good move. We'll take that. If it wants to do that again, you can see that IPO base, the move higher, and now base on base pattern. For Kodiak Gas Services, the oil and gas field services group, which Tidewater is in. Tidewater made that move yesterday, then pulled back to the moving average, and now it kind of squat there. Yeah, it was up, you know, something 1.79% today. So it's on my radar. It's something that I'm watching. Another one that I like is VNOM, VNOM. Viper Energy. This one looked like it was going to move higher today, and actually it did, didn't it? Yeah, it's starting to push away from this base. This looks fantastic. 42.68 was the high, so it's only yeah, 81% of its daily range. That's a decent day. One day pullback, then moved higher. So maybe it wants to just push away from that base. Still actionable, I would say. The oil stocks were strong today. Weatherford, this is the last one in the oil group that I'm going to cover. Pulled back to its near its buy point yesterday, and bounced off its 10 today. Yeah, it came back down to its 10, 127.61 and bounced 2%. Not bad for Weatherford. And if it wasn't Friday tomorrow, I'd put that on my ready list. I might do it anyway. If the oil and gas stocks are strong, that one should move higher and could take out the old high. Weatherford. All right, that's it for the oil and gas stocks. I got to mention some of these bank names. Bank stocks are looking okay. They're doing better. This one, had that 34.22 buy point, and you didn't form like the handle, just like wants higher prices, right? So that one looks good. Blackstone, they reported this morning, I believe it was this morning, looked like it was going to really run and then pull back, like a lot of stocks, right here. You can see it running hard, looking good, and then just that's why I just observe. I don't try to get too crazy, especially when the tape's like this. Just watching how they're going to react. And this is I wouldn't say this is pullback type of action where stocks fake like they're breaking out and then they come back in. They don't move higher and follow through. Very few of them. So you got to watch for that. And HBAN, they report tomorrow morning, the 19th. So something I'm watching, set up in a base. We'll see, what they say and how the stock reacts to earnings. Speaking of earnings, some stocks that reported earnings this morning, CTAS, nice 5.4% move on the earnings report. I had posted this morning, had a nice little inside day on Wednesday. They reported earnings. Earnings were good. The stock bounced. Very nice day. We'll take 5% every day. And this is Infosys. It's an ADR from India. Broke out of a base here, so that one looks good. Software, computer tech name, up 8%. So, not all is lost, not all is bad in the market. And like I said, maybe new leadership will emerge, and you just got to be open-minded and flexible. KMI, Kinder Morgan, they missed on top and bottom line, but market doesn't care. Oil stocks were up. Kinder Morgan was up 2.5%. So that looks pretty good as well. Okay, I mentioned to you that you absolutely have to, must sell a stock when you're down 5%. Because if you hold a stock and hold it and hold it and hold it, and it goes down 50% like Celsius did from 100 to 50, that's a 50% loss. And in order to get back to even, you need a two-bagger just to get back to even. So a 50% loss needs a 100% gain just to get back to even. So that's why I say 5% loss, cut it. The trade is going against you. Have the discipline. Don't fall in love with the stock. This is critical stuff. You have to sell. Don't fall in love with the stock because this thing could go forever and ever. I mentioned the Weinstein's stages. It looks to me like it had this, this ascending stage. If I go to the monthly, it had this flat stage, ascending stage, now the sideways stage, and now it's in stage 4 decline. You got to stay away from this. This might never come back. Like a Peloton, these stocks, they're not guaranteed to come back. It had this stage 1, stage 2, stage 3, and look at stage 4. I mean, you want to participate in that? No, thank you. So sell your stocks at a 5% loss. Sell your stocks if they slice their 50. If you would have sold Celsius, let's say you bought it here before the breakout at about, I don't know, $60, and it ran up to 90. You're going, woohoo, 50% gain, right? And then it pulls back again, slices the 50, you sell it, right? Runs back through the 50 at about $80. You buy it again, it goes up to 100. Woohoo, you're in the money again, right? But once it slices its 50, it's adios muchachos. Come on. This is $77 on the day that it slices 50. And now it's at $50. So you would have saved yourself $27 or, a huge percentage of loss, pain, and opportunity cost. So please, please, please sell your stocks. These are growth stocks. You don't want to be holding them when they stop growing. They're ticking time bombs and they're going to go off in your hand. And you're going to be crying like a little baby if you don't sell it. So I can't express this clearly enough. You can sell aggressively. I have a 20% profit. Fine, I'm going to take it, move on. You can sell it defensively when it slices the moving average, or you cannot sell it at all and hold on and go to the poorhouse. I've got to share Roku here in 2021 because this stock I held, it was doing great. My wife worked there, very familiar with the company. It was like, oh, we can't lose. Look at how much money we're making. Well, this is your classic, the Weinstein, like I talked about the stage 4 decline. There's your stage 1, whatever, due diligence phase. There's your advanced phase. Right now, right here is your stage 3, and it needs to break higher and continue higher. And if it doesn't, look what happens. It slices the 50, slices the 200, slices everything in sight. And now you you get to, I'll go to July. You get to here and it's like, man, what happened? This thing died. And if you held on to it, you're in the poorhouse, hoping that it comes back. You cannot hope these things come back. There's no hoping in the stock market. So just please, please sell. When Celsius broke the 50, that's sell. It's adios. And I just showed you a bunch of charts that like Novo. I like Novo. I've held it for a long time. My retirement account is a great company, great fundamentals, but it's sliced to 50. I got to get rid of it. I don't know if this thing is in a stage 4 decline. It could be. It's in a late stage base here. It's a stage 4. Yeah, it looks like it could make a real severe move lower, and you don't want to hold on to that. It takes too much energy and too much capital and too many gains to get back to, like I say, if this thing goes from what, 150 to 75 and has a 50% decline, it's going to need 100% gain for it to get back to even. And stocks just don't double, very often. That's a rare bird. So that's my story. I'm sticking to it. That's my lesson for today. And if you don't sell, I mean, God help you. I mean, you got to be smarter than that. Do not hold on to stocks hoping they're coming back, because I can tell you they're probably not. Very good chance. The odds are against you. So I could show you a ton of examples over time. In fact, I might make an education video and post it this weekend on stocks that have just hit that, stage 3 sideways action and then decline. This thing went sideways after breaking out of this base, went sideways for 6 weeks and then broke. So you can't hold them when they break. I mean, they're broken stocks. I call them broken stocks for a reason. Get rid of them. They're like time bombs. All right, that's it for me. Thank you for watching. Except for in honor of the great Steve Jobs, I have one more thing, and that is Netflix reported after the bell today. I just saw the headlines. It looked pretty good, the headline, and they beat on top and bottom line. They beat handily. I don't know what the narrative was afterwards, if they guided lower or cautiously. They usually do, but it's just flat after hours, down $1. And I don't know. I don't get into after hours trading. It's obviously not enough volume to really have an indication. You got to wait for the regular session to see what happens. How many times we've seen stocks down after hours and just ramp the next day? And I think that's possible here with what I read. I'll have more information in the morning because I got to go through their conference call and listen to what they have to say. It was down a little more than this. It was down a couple percent. So my intuition tells me that this thing's probably going to bounce here, I would think. Anyway, you never know. It's a coin flip. Earnings are a coin flip. Intuitive Surgical, this is a play. I think it's a play on like elective surgery, people getting older, maybe some vanity at play here, but they reported a strong quarter as well, and this is up 6.5%, traded down to its 50 during the session, and you can see that's kind of near that old buy point there of 403.76. I came close to that today. I don't know what the low was, like 410 or something. And the 50, the low is 413, the 50 is 418. It closed just a tick below it. Now it's going to bounce off that 50 tomorrow, and it looks like it might make new highs. I don't want to predict anything, and obviously it could reverse tomorrow during the session, but the report was good, and I'll have more information in the morning. But those two look pretty good from what I saw, and like I say, I'll have more in the morning on these two companies, but they look pretty good, and maybe maybe the correction is over. And when you get a move like we've seen, you usually get some short covering. I'll go to ELF because that one really, when you see a steep move like this, oftentimes you get short covering, right? It's a Friday, options expiration, likely to see some short covering, maybe back to, I don't know, 175, 180, but that 50 here is definitely what is it? The 50 is 187, so it's got $16 just to get back up to that red line here. So like I say, they're broken, but you might play them for a bounce of a couple of bucks, but that's not what I'm interested in. at all. I'm looking for new leadership here, stuff that wants to bounce. I just showed you a bunch of stocks that we're doing well. And you know, if we have to make changes, then we make changes. And if we have new leaders, I just looked at my leading stock list, and there's going to be a bunch of them coming off. So maybe we find some new stuff, new merchandise. You got to be open-minded and flexible. And anyway, at mcstockcharts.com, we never give up.